Salvage Labs team. So welcome to our first video since we've rebranded. So we're going to do these on a weekly basis and then build up and do them more frequently as well. So if you haven't met me yet, my name is Brett. I'm one of the co-founders. And what I want to touch on today is where we're at with the crypto market and then also the broader market as well. So what I'm going to do is start with the crypto market. I'm going to look at Bitcoin first. Okay, so just give me a second so I can bring my screen up. I'll just close Discord down as well so I don't get that annoying noise. Okay, it should be good to go now. Cool. So what you should be able to see here is my chart on TradingView. So let's just make that full screen. So we have Bitcoin on the monthly, okay? So last year we were calling that it seemed to have bottomed around that 30K mark. And as you can see, since we topped back in December, Bitcoin's been on a pretty steady downtrend. We've actually had, up until this month here, we've had 6 out of 8 months being downtrend, okay? So you can see that the volume profile, so this is the amount of volume, so that's the buys and sells. And it's a good way to track momentum in the market. So from November through to Jan, the market moved down and the volume was accelerating. Okay, but what gave us a brief pause was that the February, although most of the month was red, closed green, and we had a bit of a relief. And we pushed back up for a little while as well. But then as you can see, we started pushing down again, and the volume has been the highest it's been since the middle of last year. So we had a very high volume May, and that coincides with factors such as the lunar debacle, and then we've also had another high volume month through June, and that's when we had like the 3 Arrows Capital going bankrupt, and you also had your Celsius insolvency issues as well. So you've had runs on that. And then as we found out the other day that Tesla was also selling their Bitcoin into this. You've had other lending platforms like BlockFi having to sell. So we've had a lot of selling going on over the last couple months, and you can see that reflected in the volume profile of the monthly candles. Okay, so we want to start zooming in from here. So on the weekly, okay, you can see that we had that extremely high weekly candle. So that was the Celsius. We had one here, this was the lunar, okay, and you can see in terms of the weekly profile, that's the highest since we had the capitulation back in May last year. So these 3 weekly candles stand out as the highest 3 in the last couple of years. Like we had the breakout of the old all-time high back here, and that triggered a lot of volume. Okay, and that was sort of like the peak volume for a while, and then we had the capitulation, and then pretty moderate volume throughout, and we've just had these couple of spikes here. Okay, so we had a big rise down, but there hasn't been much follow through since then. So that means that, to me, it could just be a pause before we go down a little bit lower, or this is an accumulation zone for the larger players. Okay, so still no confirmation on that yet. This is the highest volume for about a month, and it's good that we're getting a green week. But what will signal to me that we can have higher prices is if we get a weekly closure above the opening of this candle. So not the wick part, but the body there. So what's that at? That's at 26,555. If we get a weekly closure above that, that could be a strong indication that the sellers here, or people shorting, are no longer looking to defend their short position. Because if they were, why would prices come up and close a weekly candle above that? So I'm looking for that. Now let's go in a little bit closer. I'm not going to go in any zoom in any further past the daily. Okay. So although not the highest volume, this was the position that cut the lowest. It's the lowest low that we've had for a long time. And then we came up and rose straight above that. So again, goes back to like what I said on the weekly, like, is this an accumulation zone? Because why did they immediately come back up and let prices come and close straight above that move down? Okay, yes, we've come down and touched, but we haven't cut those lows, and we've actually got a trend of higher lows as well. So you saw accelerating strength in terms of selling coming down here, okay, but then volume dropped off. We started to push up, and we had a bit of increasing volume on the move up, okay, increasing volume on the way down, but we had a good amount of buyers step in through this period here. Okay, now we did see a little bit of weakness here with this high, like in terms of for this section, the volume is relatively high. When you look at it back here, it's not, but we want to analyze the volume based on where we are in terms of price action and time. So we don't want to be looking there to analyze what's happening here, if that makes sense. So was this just buyers taking a pause, or is it where smart money was offloading their positions? With that wick, it would look like maybe they were offloading the positions and looking to go short. But what we've had is we've had 4 days with no selling pressure. Like the volume has just dropped off continuously. And we closed above this candle here. We've closed above this candle here. So these larger candles down seem to no longer be getting defended. So we've closed above there, closed above here. This was a ascending triangle pattern which was broken up, and it's been bounced off as support. Okay, so to me, we could just be continuing sideways or a gradual move up. And like I said, we're looking for the 2655 to be closed for strength for Bitcoin, and then I'll be confident in potentially a higher move up. Now, I don't mean that's the end of the bear market. We see big rallies in bear markets, like Bitcoin going from 12 back, or from 10 back to 16, 17K. So that's a 60% move. Okay. And we see it in other coins as well. Now, what I do want to touch on is Ethereum. So Ethereum has looked really, really strong when you compare it to Bitcoin. So if we go back to Bitcoin, it's had a good move. So if we go from the bottom of the wick to the highest price point, it's had a 39% move, which is great. I'm not saying it's a bad move at all, but when we factor what Ethereum has done in the same time, you can see how strong that has been. So almost 90% move. Now we posted a chart the other day about potentially getting to 2,300, and if we did that, what sort of a move is that? It's about 160% move. Now that might seem crazy, but if we look back through 2018, we had the blow off top here through the bear market, right? You had Ethereum come all the way down, and it moved up. Oh no, sorry, that's the wrong one. I was thinking that's not a big move at all. Let's look at it. Oh, sorry. Just give me a sec. So I realize I'm on the FTX chart, and that FTX doesn't have as much history on ETH. So let me just go to another one. Here we go. There we go. This is better. Got more price history. There we go. That's what we are after. So this was a consistent downtrend for Ethereum back through 2018, 2019, right? But we can see like the moves that happen in the bear rally. So if we take it from the bottom, which is what happened here, there's a long way down. You know, you had a 60% move right there. You had an 80% move right there. And look, we're still trending down, right? At a 130% move right there. So you can sort of see what I'm saying here is that although like you think, oh, if we're in a bear market, we can't rally too high. Like, look at that, we had a 400% move there, and we're still technically in a bear market because we hadn't created a higher high yet. So there's a high, lower high, lower high, lower high, lower high, lower high. And it wasn't until here, back in 2020, where the bull market was confirmed once we broke through this level here. So you can see we've had a range of anywhere from 70 to about 3 to 400% in a bear market. Now, I think to assume we'll get a 300% move right now is probably unrealistic because that was more towards the back end of the bear market or after the halfway mark. So I don't think we're going to get anything like that right now, but we could still easily push up to that 2000 mark. Like it might not reach the 2300, but it might reach 1900, 2000. But I'm not saying that's guaranteed. That's just going off what I see potentially happening right now. And if we zoom back out to where we are now, so we have same signal we saw on Bitcoin. So I had an effort candle up to break through this ascending triangle. So ascending triangle has like a flat top pretty much, and then has a series of higher lows. Okay, so we broke through that, broke through it there, tested it, pushed up higher, and then the volume has been dropping. Like yes, there was a green candle in here, but then again yesterday we've had lower volume on the selling days as well. So still a little bit of uncertainty on what's going to happen, but to me we could push back down to here about the 1300 mark, and then look for a move up, and that could be the start of a wave. So think of markets moving as energy, so they move in impulses. So we could have a wave 1, pull back to here for a wave 2, and we could push up to there for a third wave. That's completely viable. So we might not get a wave 4, wave 5. Okay, I probably don't think we will. I might get cut off at a three wave move based on where we are in the cycle. Cool. And one final thing before we move on to the broader market is if you look at what I was looking for Bitcoin, would that close above 26,555 in terms of retracing and closing above the very high volume weekly candle? You can see if as long as we're closing above 1432 on Ethereum, then we've accomplished that already on Ethereum. So that's why I'm saying Ethereum looks stronger to me, not just based on the percentage it's moved up, but by the fact that there was such a high volume move down here that we haven't seen that much volume since over a year ago. And like now we've completely reversed that. Now it could be a fake out that does happen in the market to trap people into thinking that we're bullish, but I'm thinking they may push it higher still to trap the most amount of people, because that's their game plan. They want to trap as many people as they can because they capture more money if they do that. Like, a lot of people are still here talking about how this is a dead cat bounce, right? But as it pushes higher, people are going to think, okay, we're turning, bull market, bull market. And the higher they push it, the more people buy into that. So just stay alert with that. I don't think we've seen the lows, or if we have seen the lows, I think we're going to test them again at some point. But I think they're going to trap as much money because they want to make, the smart money wants to make as much as they can out of the retail traders. Cool. So that's all I have on the crypto market. Now I just want to look at the a little bit regarding the wider macro. So it's really easy to get caught up in the fact that like crypto's come down really, really bad, right? But if you go through and look at the stock market, you can see that there's a lot, like the indices like your NASDAQ and your S&P and your Dow, like they're down between, I don't know, 20, 40%. So not as drastic, but you look at individual stocks like outside of the major ones like Google and Apple, you can see that there's ones down there that have taken 80% hits. So it's not just isolated to crypto. So we can't forget that. And we've seen like inflation is very, very rampant. And what we need to focus on is that like the American market is the largest. So that's why what happens there dictates a lot of what goes on globally, right? Okay, so what has the Fed been doing? So the Fed is in charge of looking after inflation in terms of the states and controlling the federal fund reserve, and the interest rates they set gets fixated throughout the financial sector in the US. Okay, so with inflation, the two tools that they've been planning on doing to battle inflation is increase the interest rates, which we've seen go up. Okay, so they're currently sitting, I think, at 2.25 or something like that, and potentially looking to go up another 0.75 or even 1 full percentage point to get the interest rates to 3 or over 3%. So that makes the cost of borrowing everything a lot more expensive, and it reduces demand because it's not as cheap to get funding, you know, and the financial system is heavily revolving around debt and leverage. So when that cost of that goes up, the liquidity dries up a little bit, and that's why we're seeing prices come down, because people are scrambling for liquidity, so they're selling off their riskiest assets first, so crypto, stocks, etc. Okay, and the second part of their tool is to reduce their balance sheet. So what happened during COVID is they just kept printing money, and what they did is they bought government bonds, okay, and that's how they got the money into the economy. So their plan has been to do, so that's what we call quantitative easing. So the other plan has been to do quantitative tightening. So that means they're reducing. So they're either letting their bonds mature, or they can sell their bonds. Okay, but they haven't started selling them into the direct market because that would have a bigger impact, but they're letting these bonds mature. So that means the government does need to repay. Cool. But what we can see here, and Peter Schiff, who is a gold maxi, has pointed out that they haven't been doing this quantitative tightening. So June is when it will start to happen, and they had a plan for the first 3 months to take 45 billion out per month, and then come September, increase that to about 95 billion, reducing that off their balance sheet. Okay, but what you can see here is for the last 2 weeks, they haven't been tightening. Their balance sheet has been expanding. So we can have a look at that here. So this is the total assets of the Federal Reserve. So you can see they kept increasing it. So they're buying these bonds and the assets. So this is a million. So that 8.9k million, that's $8.9 trillion of assets that they've got. And you can see they did slightly start to reduce before the official start in June. But you can see even early on in June that there was a bit of an increase, but then they did decrease a little bit. Okay, so from the start of June, they went from 8.9 trillion So they hardly shifted anything out of there. They maybe got about 20 bill, so about half of what they wanted. But now you can see that it's trending up again. So we're getting closer to the levels of the start of June. So have they already abandoned their plans? Who knows? Like, it could just be something similar to this, and then we get a big drop down. But it's just something to keep an eye on, because if we do go into a recession, like, there's a chance that inflation doesn't come down, because it's not just all focused around the money. There's supply side pressures as well. So, like, this whole thing's going to get messy, and I don't think there's any clear-cut right answer on what's going to happen. There's so many differing opinions out there as well. So our mission is to not just focus on crypto and NFTs with you guys, is to educate you around the whole system, and give you guys an update on what's going on in the broader markets as well. So it's definitely going to be interesting what happens at the next FOMC meeting, and people are already starting to price in that there could be 100 basis points or 1 full percentage increase. I think there's still more people leaning at 75 basis points. But then something to keep an eye on is the day after, is when we start to get some of the bigger companies with their earnings report. Okay, so if their earnings are much worse than anticipated, we could see like a broader sell-off in the market. Okay, but I'm starting to think that this quarter, although they might come slightly under what's expected, I don't think it's going to be drastically too bad. I think we're going to get hit harder at the end of the third quarter. I think that's when we're going to see a lot of these companies like really see hits to their bottom line. So to me, I think, we could have a okay August, and then coming September, October is when we can test those lows on crypto again, and stock markets could push lower than what they have. But we just got to stay dynamic and fluid, and think about getting yourself some cash to buy in when we do hit these lower prices. I wouldn't be putting too much in right now. If you do want to have a little bit of a play with stuff, maybe allocate yourself $100 to do some trading. I wouldn't allocate too much. Like, do some learning. Use this time to experience and get that experience trading. Sorry, we'll be putting some calls. We'll be doing some education videos on that. The reason I say it doesn't even have to be 100. To do a little bit of money is because your reaction is going to be different when you're trading with money compared to paper trading. Okay, that's why I say use a small amount. Like, to you, it might be $10, $20. That's fine. It's actual money. It's going to make you react different to if you're just paper trading. Okay. So I hope that video has helped. We're going to do more of these. If you have any questions, pop them in the comments, or feel free to message us on Twitter or Instagram.